In this video, I'm going to talk about how to use the simplified method for calculating the taxable portion of an annuity. Tom is a taxpayer who retired in February of 2021. He's 64 years old and is expected to live another 20 years. His pension pays $28.50 per month, and in 2021 he received 10 payments for a total of $28,500, for which he received a 1099-R. Tom has contributed $85,000 into this pension based on his employee contributions and has never taken any tax-free withdrawals. In this case, we're going to use a simplified worksheet. Let's scroll down here. So we're looking for Tom's taxable income from his pension for tax year 21. So the first thing that we need to do is enter the total amount received this year. So the total amount received this year, if we remember from up top, is $28,500. So I'm going to go ahead and annotate that here, $28,500. All right. Enter the cost of the plan at the annuity starting date, and this is going to be the $85,000 that Tom had in this plan. That's $85,000. All right. So then we go back up and we realize that Tom is 64 years old. All right, they gave us these facts. We look at this table right here that is given to you in the simplified method worksheet. We see that he's 64 years old, so he falls into this bracket here, the 61 to 55 bracket. So then we use the factor of 260, which is going to be given to you. 260. And then we follow the directions in the sheet. Divide line 2 by line 3. Line 3 is the 260. So we take a calculator here, take the 85,000, you divide that by 260, you end up with $326.92. So $326.92. You multiply line 4 by the number of monthly payments this year, and then if the annuity starting date was before 1987, etc., we're disregarding this because this annuity took place in 21. So we take and we multiply 326.92 by the number of payments, which is 10. So that's going to give us $3,269.20. Enter the amount, if any, recovered tax-free in prior years. Remember from the problem, it says that he has never taken tax-free withdrawals. So that number will be 0. And then we subtract line 6 from line 2. So we take this 0 from line 2. We end up with the same 85,000. And then we take the smaller of line 5 or 7. So this is line 5. This is line 7. The smaller of the two is going to be the 3269.20. And then the taxable amount this year is going to be to subtract line 8 from line 1. Line 1 is the full $28,500 he received on his 1099-R. So we take $28,500. We subtract $32.69, and that gives us $25,230.80. So $25,230.80. $25,230.80. So this right here is the amount that Tom will pay taxes on using the simplified method.